Cannot see a multiple device, boss. right, good evening. Welcome to IQI WA Friday Prop Talk. My name is Lee and I'm the Sales and Marketing Manager at IQI WA, and I will be your host this evening. Now, if you have not heard of IQI, IQI stands for International Quality Investment. And IQI is the largest international real estate network in Southeast Asia and Middle East region, with more than 18,000 agents now across 20 countries. You probably think 20 countries is not really that big or not that significant, but what you're probably not aware of is all these IQI branches around the world, we are actually working under one roof. So which means we are able to sell and market project cross-border. Basically, say, for example, my colleague in IQI Canada or Malaysia, they can actually market our project in per project in the country. Likewise, my investor can also purchase an investment in Thailand or Cambodia through us at IQI WA. Now, I call that truly global. So that is about IQI. And IQI WA is Perth-based sales and marketing agency. And we specialize in off-the-plan apartment projects, as well as brand new house and land packages. And of course, we also do establish secondary market as well. So if you are looking for a project marketing team who has a very solid track record in project marketing your project all the way to settlement, please, we would love to hear from you. Or even if you're just looking to sell your own home, we would love to hear from you. You can leave us a message in the comment below, or you can private message us and one of our team members will get in touch with you. All right, this evening, you are here because we all like a good deal. We like a best deal. And this is the important topic that we're gonna cover this evening, especially for homeowner and investor. Because a drop in like 0.5% in your home loan rate means you're gonna have lots more cash money in the pocket to spend. So why not? Yeah. And I have also heard a lot of people, like the moment they get their home loan, for 30 years, they never look into it. And they never really compare a product in the market to see what sort of things are out there. So this evening, we thought we'd invite a special guest to share some insight with us. And we have Gerard Tam with us this evening. So Gerard is going to tell me this evening where to find the best deal and the best loan product in Australia. So I can't wait. So he got a big job to do to share this very important information that many of us would like to find out. Now, I have been working for Gerard for quite some times now, and he always told me I'm the best agent. Right, Gerard? But what is more important is he always helped my client to get the best loan product. And that is even better than the best agent, because without a loan, there will be no properties. There will be no transaction. There's no home. So he has a very important job. And Gerard has been in the finance industry for the last 20 years. And he started his career in Bank West back in 2001. And then he had an opportunity to work in all area. So from banking, he started from teller and moved up all the way to bank manager. And he even spent some time in the head office in the retail strategy, as a retail strategy manager, looking at developing a new banking system and product. So he is full of experience. And then in 2010, he made a change to Wechat and spent the next 6 years with the senior business banking manager. And during that time, Gerard has earned 2 consecutive awards as Westpac top business banker, and finishing up his career there as #1 business banker for Westpac nationally. And then he left bank in 2017 and joined independent broking firm at AA Finance Solution. Gerard also holds double degree. So he has a degree in Bachelor of Art with honor as well as Bachelor of Economy. And when he has free time, he said that, Leanne, you can share that with our audience tonight. He likes to go fishing and indoor gardening. So, yeah, if you have any question about fishing and indoor gardening, other than lawn, you can call Gerard as well. He's more than happy to share his experience with you. Now, without any further ado, let me bring Gerard up to the floor. Hi, Gerard.
Hello, how are you, Leanne?
I'm good. I'm good. Yeah.
Thank you for the warm introduction.
I know, right? Your achievement is too long, so I have to make sure I said it right.
Oh, thank you. Thank you.
Yeah. So yeah, thank you so much for making the time to join us this evening, Gerard.
Yes.
I believe you do have some slide show. A presentation that you would like to share with us.
Yes. Now, before I start, just want to thank yourself and the IQI team as well for kindly inviting me to present in this week's episode of Property Talk. And like you've mentioned, IQI does have a large international presence, especially in Perth. It is a privilege for me to present to your viewer base. So thank you. Secondly, I'd also like to thank the viewers that have taken the time out of their busy schedule, especially on Friday, 8 p.m. to view this episode. So I hope that the content that I've got here for you is useful. And if you've got any questions or inquiries, my contact details are at the end. Feel free to call me or email me anytime, whether it's about lending, loans, or about fishing. So just a little bit of background of who I am. I'm originally from Singapore, migrated here with my parents in Perth back in 1988. Perth was a very sleepy town back then. I did all my studies here, as Leanne did mention. I did my double degree in Murdoch University. But after graduation, it was hard to get a job because no one actually wanted to hire me because I didn't have any work experience. So I did actually start at the bottom of the ladder in 2001 with Bankwest as a teller. You know, one of those tellers that if I was counting your money, if I was counting too slow, you asked me to go faster. Or if I counted too fast, you asked me to count again. Yeah, that would be me. So I did leave the bank back in 2017. As I did mention, things were getting a bit tough already. Credit policy was tightening quite significantly. So I found myself from 2015 onwards that I was saying no more often to my customers. Gerard, can you do this loan for me? And I found myself saying no quite often. So it was probably a point where if I didn't leave and work independently with the broking firm, because all I dealt with was just one product for the bank. So the natural progression was actually to resign back in 2017. And I've joined the team called AA Finance Solutions, and I've been there since. So you can see that I do have quite a strong banking background. So hopefully I can share some of the insights with what's happening in the banking industry. So before I jump into the PowerPoint presentation, just give you a quick overview of the topics that we'll be covering tonight. Firstly, what I'll do is I'll give a quick overview of AA Finance Solutions. So this is where I would quite unshamedly give ourselves a bit of a plug, myself and the team, of course. And then secondly, I'll kick off with an overview of the finance industry. But I think I'll look at this little part differently and actually share with you some of the personal stories of what my customers are doing. The next part of our discussion will be probably quite an interesting one. I'll spend some time actually putting some slides together. It will be looking at the interest rates being offered by the banks. But what I thought I'll make it more interesting is I'll actually do a comparison with non-big banks, some of the smaller lenders. So you can look at traditional lenders versus new lenders, if you like. We will look at owner-occupied versus investment rates, and we'll look at variable versus fixed rates. So that one there is probably the meat of the presentation. Then I'll cover a little section called Did You Know? So the Did You Know section will be two quick key topics here about what viewers may not know about what lenders offer. So hopefully I can present something new here. Followed by a slide where I will highlight all the lenders and all the banks and what promotions and what cashbacks they've got at the moment. So if you're looking to refinance, now it's a good time. If you want some ang pao, if you like, red packet, bonus money from the bank. And lastly, I'll finish up on the topic about self-employed customers. So self-employed customers, but through low doc lending. So currently there's a bit of a breakthrough in low doc pricing and fees, and I'll quickly cover what they are. Without further ado, we'll kick off into the slides if you like. Is that okay, Liam? Brilliant, cool. So that's us, AA Finance Solutions. This is the team. We will start from left to right. We have Leonard. So he is born and bred in Australia. He's the broking principal and license holder. Previous experience includes working. So he's very fluent with Indonesian. So he's the boss that oversees everything that we're doing. Secondly is Elaine. She's the team leader. She does probably the most important role in the team. She manages our settlements. She does our important urgent follow-ups, chases out for outstanding docs, and helps us with putting loans together. So she's originally from Malaysia. Then you've got that cheeky guy on the right-hand side, and that's me. The other three remaining team are, we've got Manu. So he's a good all-rounder, originally from India. Previous experiences include working in Bank West and Citibank as well as a area manager. Next, we've got Justin Ong. He's our real Asian specialist, extremely fluent in Mandarin and Cantonese. Previous experiences also include workings in Bank West and Bank of China. Lastly, we've got Ryan. He's our resident Korean broker, qualified accountant by trade. Ryan brings a wealth of knowledge and helps us with a lot in translating financial statements and tax returns. So if any of the viewers are keen to get in touch with anyone in the team, please contact me. My details will be at the end. Just flick me a quick email or phone call if you need to speak to any of these guys, and I'll gladly hook you up. So why AA Finance Solutions? Well, we are an award-winning team. We actually won a couple of awards last year, quite important awards. For WA, we did finish as the top 7th broking firm in WA. But most importantly, we did actually finish #1 in WA for business lending. So that's quite big achievements for a small team of. We are a diversified team, fluent across a lot of languages. So if you prefer to speak in Mandarin, Cantonese, Hindi, Indonesian, or Korean, like I said, just get in touch with me and I will hook you up with one of the brokers that can speak those languages. 50 years combined lending experience, and we're extremely focused on our clients. So with such a diverse team, you can imagine that we can tackle all sorts of scenarios. Whether you are PAYG, working for salary, on casual income, or just started a new job, we can help you. Or whether you are self-employed, you're a director in multiple companies or partnerships and trusts, we can help you. Whether you're buying your first home, or whether you are a property investor and looking to accumulate your second, third, or fourth property, we can definitely help. We will help customers if they want to buy residential or commercial loans. If you are in an employment professional, like a doctor, the GP, accountants, physiotherapists, optometrists, we can actually help you apply for 90% lending with certain banks, certain of the big banks, because they view these professions as A1, and they're happy to actually lend up to 90% without lender's mortgage insurance. We do a bit of property development, although admittedly they're not very popular with the banks at the moment, but we can look at development 4 units or more. Migrant and overseas lending, we also cover. Low deposit home loans. So if you've got low deposit or little deposit, starting from 2% deposit, we can look at key start lending for you. Some of the banks as well will allow you to borrow to have 5% deposit, and we can actually lend you up to 95% without lender's mortgage insurance. And lastly, complex structured lending. Probably something in an area that I'm quite good at is if you're looking to buy at, for example, in individual names, but you find that because of that structure, you may not be able to borrow because of servicing requirements. One of the things that we can look at is then perhaps look at doing a trust, put a different trustee up and look at putting different beneficiaries at the back end. So whilst a particular structure may not work, this is where we can actually sit down with you and explore some options. Hey, you know, maybe we can make things work if we do things a certain way. The next slide is access to lenders. These are just some of the numbers of lenders that we've got access to. We've got access to hundreds of lenders. In reality, majority of the deals probably fall between 20 to 30 lenders in general. But if you've got one of those deals that doesn't quite sit, you know, just sits outside the box, we can find a lender that will best suit you as well. So, overview of the finance industry. This one here is a very, very broad topic. And I probably just want to focus over the last 12 months, what the finance industry is experiencing. In particular, I also want to explore the economic impact of COVID in Australia as well. So probably back in April 2020, the federal government announced that the whole country will go into lockdown. So you got businesses such as cafe and gyms were forced to close and staff were laid off. Unemployment did rise. And I actually did remember driving past Centrelink, which is, public welfare centers, the following Monday. And there were already long queues in the morning where people were lining up for unemployment benefits. So the government stepped in and announced a thing called JobKeeper. So JobKeeper is where the employees that qualify, they can keep their staff while the government will pay the salaries for 6 months. Banks and lenders also stepped in and gave homeowners the option to defer their loan repayments for 6 months. Fast forward 2020, many analysts were predicting unemployment will skyrocket when JobKeeper ends. So far, we've not seen any of this. In fact, latest unemployment figures show that levels are even lower before pre-COVID. Also, when the bank's 6 months home loan deferral option ended, a lot of people were also predicting property prices will fall because there will be a rush of people putting properties on the market because they've lost their jobs, cannot make repayments. So have we seen any of this? The answer is no. As a matter of fact, property prices have gone the other way, has gone up. So how has the finance industry been impacted with all of this going on? Well, the finance industry has been smashed over the last 12 months with a heavy volume of loan applications, actually, driven mainly by refinance and new purchases. We have also seen a massive increase in land and construction loans, which have been driven by the government grants as well. And this accumulation of application volumes have resulted in extended delays, particularly over the last 6 months with the banks. Normal loan application may take 2 or 3 weeks for approval pre-COVID. It was taking as long as 8 to 10 weeks during COVID. So wait times, although has improved a little bit, with a lot of banks recruiting and training up new credit managers. So who are these customers? Who are these typical customers that are driving the demand in the industry? I'll share with you a couple of examples of current customers that we are looking after now. So customer number one, for example, Chinese, originally from China, been in Australia for 9 years, is a naturalized Australian citizen, works in the mining services as a driller. So what they do is they go out there, mine sites or potential mine sites, and they drill into the ground, get a core sample, send it to the lab and find out what the mineral deposits are. He's telling me there's so much work at the moment that his boss needs him to work 7 days a week with no break. Okay, it's probably at the point where he's a little bit frustrated because he's overworked, but that is how much work there is. So he came and sat down with me to just discuss about potentially buying a house. So we did some calculation, and based on the calculations, it was very obvious. It was the rent that he was paying now versus taking out a loan, paying principal and interest. He was actually paying less than actually renting. So after presenting it, 2 weeks later, he went out there and made an offer on an apartment, and we've only just recently settled on his loan. So that's customer number one. Customer number two is self-employed, originally from Malaysia, been in Perth for 30 years, runs his own IT industry, IT company. There's so much work at the moment because what he does is he goes out to remote mine sites, set up IT service, and there is so much work at the moment that he's got to hire contractors, and he can't find enough contractors to be able to do the work that he's got. Admittedly, you know, when you look at 5 years ago, when the mining boom ended, his business was suffering because the amount of work was dramatically reduced. And now with the mining boom coming back into play, he's just extremely flat out at the moment. And the third customer that I want to share is, this one's interesting. This one's a father and son team. Father's been in recycling for 40 years, originally from Malaysia. So they run a warehouse here. And what they do is they get a lot of cardboard and paper, pack it up, send it to Malaysia, send it to China. These are the countries that are buying up the recycling. The rent that they're paying at the moment is about $100,000 a year. Okay, because there's so much work at the moment, they're looking at a warehouse that's double the size. After borrowing the full amount, 100%, 80% against the commercial property, and whatever's left over, we top up on the home loan. The repayments on the home loan, principal and interest, is actually half the rent that they're paying. So driven by work, driven by interest rates being at historical lows, we're seeing a lot of action at the moment in the finance industry. And this is some of the things that are driving the demand. So lastly, I want to talk, what does the future look like? And from what we can see, I believe that this boom or the heat will continue for a little while. One of the things that people talk about is the China trade tension. Okay, so China is not purchasing a lot of Australian products at the moment, or the perception of it. I think one of the examples I want to give is the crayfish industry or lobster industry, if you like. For WA, it's a very big market. It's a very big export market. And for the first time in December and January, we locals were able to buy lobsters for $20 each. And these prices were not seen like 20 or 30 years ago because it was so cheap. Basically, China stopped buying and there was a big supply, a big glut. And domestic market was trying to, we in WA had the luxury, basically, if you like, to get access to all this stock. There's no issue at the moment. Or the issue with China not buying, it's sort of eroding because Hong Kong is buying, okay? America's buying and Japan is buying. These were the markets that were always there in the first place before the China boom. So Australia just moved from one buyer to another buyer. And now that China's not buying, they're just going back to the existing ones. Then you've got barley, agricultural. You've got barley. China was not buying our barley. Thailand is now buying the barley. Australian wine is now being bought by Europe. Good thing about Australia is it's so far away from Europe. It's seen as, Australia is seen as an exotic country. So now when there's all this wine available to buy, yeah, Europe's taking it because they want to, experience some products from an exotic country like Australia. So given what I've just pointed, I believe the finance industry, it's still going to be gangbusters and still going to be surging for a little while yet. Okay, the next few slides, there's going to be a lot of numbers here. So before I do a deep dive, I just want to let the viewers know that the rates that have been quoted here, okay, will depend on a few things. It will also depend on the amount that you borrow versus the property value. All these figures here are based on an average loan size of 500,000 over a 30-year term. It's also based on principal and interest repayments. So what I'll do is before I kick off, the first two slides will be based on owner-occupied properties. Okay, it will be based on a variable rate. Okay, and you'll be looking at the big four versus the smaller lenders. So on this slide here, interest rates, variable, owner-occupied. On the left-hand side, these are the major banks, the big four banks, if you like. You've got Westpac, NAB, CBA, and ANZ. These are the rates that I have applied for discount already. So if you actually look up the banks and try to get this rate, you're not going to see it. In the broking firm, what we can do is we can actually apply for discount with the lenders. And what I've quoted is the after discount rates. So with after discount rates, Westpac's the cheapest at 2.54, ANZ being the most expensive at 2.74. When you look across to the right-hand side, it's very interesting to note that there's a lot of lenders there that can actually beat Westpac. You've got Resimac. Resimac's a non-bank lender. They start at 2.29. Macquarie Bank is a Queensland bank lender, 2.34. Citibank, everybody knows Citibank. Then you've got a weird one. It's all numbers. Is 86,400. This is actually a new emerging online lender. And I believe that they've recently been bought over by NAB. So what they do is, you apply, everything is all done online. There is no branch network, but rates 2.39. Obviously, without any branch, without any extra overheads, they can pass on that cost, or they don't have too much cost to pass down and they can start at a low rate. Then the next one, you've got AFG Home Loans. Now, AFG is the broking aggregator that we brokers are under. So what they do is they negotiate money from different lenders such as Bendigo Bank, Pepper. And what they do is then they get this money at wholesale, and then they've got their own credit managers and they lend the money out. So 2.39. Bank West is big in WA, 2.46. ING, Suncorp, and ME Bank. So we'll just kick off to the next slide for investment. Okay. Investment rates are a little bit more expensive. So in Australia, this is how banks sort of price differentiate, if you like. Owner-occupied will always be cheaper than investment. Investment, they'll always put a little bit margin on it. Now, then we'll start with the left-hand side. Westpac, cheapest at 2.84. Then it goes up to 3.15 with ANZ. So then you cast your eyes on the smaller lenders on the right-hand side, and you can see most of the lenders that are put there can actually beat Westpac. Macquarie Bank, Queensland-based bank, 2.49. Resimac, 86,400. There's even Bluestone there, which is a non-bank lender, 2.59. They get a lot of the funding from other banks, wholesale. So you can cast your eyes, have a bit of a look. If you see that your rates are much higher than what's being quoted there, I suggest give me a call. My details will be at the end of the slide, and we can gladly look at helping you. Okay, so that brings us to the next section, would be fixed rates. Now, there's a lot of fixed rates. You've got 1-year fixed rate, and it goes up to 10-year fixed rates. What I've done is I've broken down the key ones, which is 2 years, 3 years, and 4 years. Anything outside that is just too long, and the rates are too high. So interest rates, 2-year fixed rates, owner occupied. Westpac, 1.89. Okay, so those rates there are very low, and you've got smaller lenders across the right hand side, and you can see all of them are lower or equal to Westpac. Okay, P&M Bank, 1.79. I'll bring you to the next slide, which is your 3-year fixed rate, owner occupied. Okay, rate goes up slightly. Westpac is still under 2%. Okay, then you've got AMP, smaller lenders, ING, BOQ, St. George, all under 2% as well. Okay, now that brings us to the 4-year fixed rate. Next, so the rate goes up now. Okay, so the reason why rates go up is because the Reserve Bank or the banks don't see interest rates staying historically so low. Rates will eventually rise. Westpac, 2.19, starting at, and then you've got NAB, the same as well. P&M Bank, smaller lenders, St. George, Bank West, BOQ, okay, all starting at the low 2s. So if you're looking to fix your rates, it's probably a good time to look at it. There have been some discussions emerging lately with the lenders that they are now looking at pushing up some of the rates already. Yeah. So, okay, the next slide would be for investment properties. So next 3 slides will be all investment, 2 years, 3 years, and 4 years. So this slide in particular is a 2-year fixed rate. Okay. I won't go too much in it. I'll just let the viewers have a bit of a look. Next slide will be your 3-year fixed rate. And the last one would be the 4-year fixed rate. Okay, so before I go on to the next topic, this is just a snapshot of the interest rates that the banks. Now remember, to use all these figures as an indicative guide only, because it doesn't really take into your consideration of your personal and financial circumstances here. So in order to get a more accurate depiction of what your rates will be, give me a call, send me an email at the end, and I'll gladly sort of explore and work out the rate that will be applicable to your circumstances. Okay, that brings us to the next topic. Did you know? So, did you know that fixed rate can come with offset account? So there's a perception that if you go fixed rates, you can't have an offset account because fixed rates are normally very low rates. And when the bank give you a low rate, they don't give you a low rate for nothing. So in most instances, when the bank gives you a fixed rate, it doesn't come with an offset account, okay? However, AFG, fixed rate home loan, alpha, that's actually part of Bendigo Bank, okay? And it comes with 100% offset. So this is probably unheard of. So if you want to chase a low fixed rate, you can. If you've got a bit of cash in your transaction account that you want to put into good use and make it work for you by paying less interest, that's probably a good lender to look at. So AFG, Alpha. ANZ offers 100% offset as well, but only for their 1 year fixed rate. Okay, so if you're looking at fixing it for 1 year, ANZ 100% offset. Bankwest and St. George, they both offer you 40% offset. So what this means is that if you've got 100 grand cash in your transaction account, you're only allowed to offset 40% of it, not 100%. But 40% is still better than no offset with most of the banks. The next one, did you know rate for your investment property? So AMP is one of the lenders, okay, that if you bring across your owner occupied and investment properties for refinance, you can have both loans at owner occupied rates. Okay, so currently 2.34 for principal and interest and 2.99% for interest only. So if you've got, if you're a property investor and if you've got a portfolio of 2 or more properties, you'll find that, you can only have one loan at owner occupied, and your second or third loans will need to be at investment, and that will be at your high twos. AMP is probably one option that you can look at. Combine them both and have them at the low rate of 2.34. The next slide, current lender promotions, cashback. This is probably the juicy information here. So if you're looking to refinance, these are the current offers that are active at the moment with the lenders. Bankwest is a good one, $2,000 cashback. BOQ, which is Bank of Queensland, $3,000 cashback. Okay. Let you cast your eyes there. So most of the big banks will offer you cashback. So if you sort of cast your memory back to the previous few slides where I was showing you a comparison between the major banks and the smaller lenders, and there was a trend where the major banks were a bit more expensive than the smaller lenders. So this is where they sort of replace that, if you like, and give you some cashback. So a lot of these cashback are offered by the big banks. So lastly, I will cover is your low doc self-employed. So what is low doc self-employed? Okay, so if for those self-employed customers that have tried to look for a loan in the past, and the banks have said, "No, we can't help you because your tax returns or your financial statements aren't up to date, or you don't have the numbers necessary to be able to get the loan for you," we can look at low doc, because low docs don't require those documents that the big banks ask for. In short, low doc lenders will only ask you to provide 1 of 3 documents. Number 1 being accountant letter, or provide 6 months BAS, or 6 months business bank statements. Unlike the accountant declaration letter, so it's basically one letter from the accountant to say, yes, your business or your company is earning X amount of dollars. And I'll give you an example for a working example for one of my clients. So I've got this customer that owns a security firm. So he's gone to look for a loan, but his tax returns didn't have the numbers to support the loan that he was looking for. With the accountant's declaration letters, you can declare the income that you are going to earn or that you are on track of earning. So it's more of not after the event. So this customer with the security firm had his business increase quite significantly because of COVID. So with a lot of COVID, a lot of customers were working from home. So with customers working from home, a lot of them were engaging his services, if you like. So his projected income was going to increase quite substantially. So with the accountant supporting him and putting an income figure that he is likely going to earn, we managed to help him get the loan that he was looking for. With low doc lenders, there's also the perception, if you like, that it is very costly and it is a very expensive option. I think traditionally, yes. So whatever rates that the banks offer, low doc lending, you could probably add a 2% or 3% interest rate margin on top of that. Okay. So while the banks were offering 3% for home loans, low doc lenders could be up to 6% if you like. There's also very high setup costs. So if a customer wanted to borrow, let's say 500,000, an average loan size of 500,000, they could be hit with a one-off cost of 5 grand to 6.5 grand, which is calculated at 1% or 1.5% of the loan amount. So because of these sort of costs and expenses, it sort of put a lot of customers off from wanting to take this option. So a self-employed customer might really want to buy a property, but they feel that because of such high expenses and fees, they sort of put that on hold and not look at it. But currently there has been a breakthrough, okay? Cost of credit is so cheap that it is now has been passed down to low doc lenders. Currently, we've got a player called Resimac, okay? They have waived the application fee. They have waived their setup costs. You can borrow up to 80%. It comes with 100% offset, okay? Owner-occupied rates at 2.99% variable. If you borrow 80%, 2.99. Or if you want investment, it's 3.29. So, and all you need to do is get an accountant's letter, 6 months BAS, or 6 months business bank statements. So we're finding a lot of people now, self-employed customers in particular, stepping back into the market, borrowing. Why? Because the cost of credit is now cheap for them. And the key point is, for any of the viewers, if you've got existing low doc loans with Rams, Peppers, Liberty, Bluestone, Latrobe, so on and so forth, this finance, save thousands of dollars in interest every year. Like I said, give me a call and I can gladly help you. And this is pretty much it with the presentation. Last slide. This is my contact. Okay, mobile number there, emails there. All inquiries are welcome, and I really hope to hear from you soon.
Thank you so much, Derek. That is such an informative session, and it's quite painful as well because some of my loan interest rate is so high. Like what you said, it is perfect time to do refinance because the rate is so low now. Yeah. So
Correct.
for people that who hasn't, so for people that who haven't looked at their loan for a while, it's a good time to look at it now, isn't it?
Correct. Absolutely.
And let me just have a quick look at through the chat room first. I forgot to check in the last few minutes. Yep. So I got a few questions jotted down here as we go. I heard that one of the loan products that you have for medical field people,
yes,
they are able to get loan up to 90% lending without LMI, and that includes physiotherapists.
It does. So, or physiotherapists. Look, I haven't got the information. I need to double check again. They generally what they do is they will they've got the thing called medical policy. So medical policy is for customers in the medical field. Now, not all medical fields are covered.
Yeah.
So with the physiotherapist, I need to have a look.
Okay. Yeah. But if you're a doctor, you're a dentist, and that will be the loan product you can
They love
use, isn't it?
dentists. Absolutely.
Yeah, sounds perfect.
Or real estate
Um,
agents and yeah,
what did you say? Sorry.
or real estate agents if you like.
Perfect. I'm coming to you. my
Cool.
fixed rate, my fixed rate is stuck for a long time, and I'm
Yeah.
stuck at about 4 point something% still. So it's pretty
Well,
painful.
one of the things one of the tips that I'll give you is to break a fixed term. Sometimes it may not be as expensive as you think. It all comes down to
Mhm.
what the rate is that you're fixed at versus the current rate today,
Yeah,
and also the
yeah,
term of the fixed rate that is to end.
yeah.
So if you're on fixed term and if it's a bit high, I suggest what you do is you give your bank a call first. Okay, that's the
Mhm.
first call, and just say that you're looking to refinance. Could you please ask them what costs, what are the fees, or what are the charges that are being incurred? If it's
Mhm.
only $1,000, you might think, hey, you know what? It actually isn't a bad idea to refinance to another bank. Why? Because remember the cashback bonuses that I mentioned? So some of this cashback will help you buffer the loss. Okay.
Mhm.
Couple that with the low interest that I can get you with the other banks, you might find that you may actually be ahead after the first year. So this is
Mhm.
a tip that I'd like to share with yourself and all the viewers out there too.
Yeah, that's a good hint. Definitely a good hint. So you will break up a little bit just then. So basically, if you're looking to refinance, even though your loan is fixed and then the term is still a little bit long, what you could do is give your bank a call to find out actually if you break the loan at that point in time, roughly how much you're going to pay back.
Correct.
Usually, by what Gerard say, by the time you get the cash from the bank and with the lower interest rate, you will actually be better off. Yeah. So many of our clients have done that, which they're really thankful that this is an option.
Yes.
And yeah, so if you are thinking to refinancing, even though you're fixed, stuck with a fixed rate loan, do what Gerard has suggested. At least then you know your option. Any money is money this day. Yeah. Um, and we have a quick question here about the professional package that you mentioned. Is there any minimum income required for the professional no LMI package?
That's a very good question, actually. Now, some of the banks will, for example, with Westpac, there is a minimum income that they want you to earn. For example, $150,000 a year. However, Westpac's not the only bank that will offer that a professional package. ANZ also does the same thing. So one of the examples that I will give as a live an example was an accountant, a qualified CPA accountant, and they qualify under the 90% no lenders mortgage insurance. Westpac is saying, no, you need to earn X amount of dollars. And the customer didn't actually earn that minimum figure. So then what we did is we went to ANZ, and ANZ saying, yep, we will do the same package and there's no minimum income requirement. So this is where then we brought the customer to ANZ instead. So
So
yes,
that's
we can, the good thing is we've got access to many banks. And if one bank says no, I will help you find one that says yes.
that's why I say you're the best. There's always option. That's the good things. Yeah. And back to that professional package. See, look, I work with a lot of professional, yeah. Is pharmacists considered under the medical package?
This is a very good question. Now, I've
Yeah.
only done one a few years back, and the answer was yes. And then it was no, they took it off. Now,
Mm,
whether it's back on or not, I'll need to check. So if these are your questions from your viewers, if you don't mind, I can come to you over the weekend and I
yeah.
could say yes or no. I could give you a more definite answer. But the
Yeah.
pharmacist one is one of those touch and go. It was definitely on, and then the banks did take it off. And I'm not sure whether they actually put it back on again.
Yeah. But with your the access to so many different products, surely you can get something that's similar or even better.
Yeah.
Yeah. Okay. I have another quick question about Resimax lender. So
Yes.
does Resimax cover the valuation costs or a borrower need to cover for the cost?
The borrower will need to cover the cost. Now, the thing with Resimax is this. This is the cheapest that I've seen for a low doc lender for a long time. Previously, it was Rams Home Loans, and then they sort of went out of the market. and not did any more of those low doc lendings, Resimac's come back and they've actually matched a lot of the previous benefits that RAMS did. So even though rates are so cheap, the cost that the customer needs to bear in mind are, okay, they need to pay for valuation. Valuation could be around sort of $300 to $500, okay, depending on the value of the house. The more expensive the house, the more expensive the valuation cost. But customer does pay the valuation. There's also the lender's settlement fee. So Resimac have got their own settlement agent, okay? Because it's not in-house, they actually outsource it to external lawyers to do it. So if you're purchasing a property and Resimac has to get their own settlement agents, that's the fee that you pay them. Roughly, it's around sort of $600. So if you add the settlement fee plus the valuation, all up is about $1,000. Okay.
Yeah, that's not too bad.
And if you didn't want their offset account, there is no annual fee, no package fee, no monthly fee as well.
Oh, that's great. Yeah, that's great. Just another quick question about so if you know how some of your loan product they're looking at certified accountant, like letter to prove the income.
Yep.
Are those CPA accountant has to work in a accounting firm, or they can be a CPA working in a
So what they do in the accountant letter is, you can't just get any bookkeeper or any backyard accountant if you like.
Yes, of course.
So normally on those accountant letters, they will ask you to put your professional body number. So if you are a registered CPA, you just got to put your number down. And normally there is a register that we can actually look up. It's a government website where it keeps a register of qualified accountants. So if you give your professional number, professional body number, we can type in the number and look you up actually. So this is how the bank or Resimac, if you like, can verify that you are a qualified accountant.
Okay, so that's good. So with the we were talking about the valuation just then. Okay. How the Resimac, since you have to pay for your own valuation, can we actually order, like as the buyers, get a valuer to do the valuation ourselves, or has to be from the bank?
It has to be. So this question here applies for all the banks, all the lenders as well. How the valuation report works is you can't just use another bank's valuation or another valuation report to support your loan with the current lender. The reason why is because on the valuation report, it needs to be made out to the lender that's doing your loan, because there will be third-party liability insurance that the valuer has to pay, and they pay hundreds of $millions a year for this public liability insurance on the valuation report. So the report that's made out is made out for that bank, and the insurance will apply to that as well. So in short is, if you're doing a deal with a particular bank, that bank needs to order the valuation report.
Fair enough.
However,
Gerard always have however and but.
This is where Macquarie Bank comes in. Okay. So as you know, you can order 3. So for example, let's say a customer, maybe wanting to do a deal and they're getting different valuation reports, and different valuation reports can have different valuation amounts. And that's true. We've done that exercise many times. Macquarie Bank is the only bank that will accept another bank's valuation report.
Interesting.
Okay? So if you've been dealing with the bank and you're not getting the figures that you like, and you've played around with a few different valuation reports from different banks, and you've come to this valuation report in particular that looks really good, but maybe you can't go through that particular lender for whatever reason, bring that report to me and we can explore Macquarie Bank. Okay? Yeah.
That sounds really good. I like the however. Yeah, that's good. Life is good with options. Yeah. So we've been talking about mostly local product, like the loan product that we've been discussing today, like talk about, all for local resident only. So for people who actually live here. And just a quick question, do you actually do loan for foreign buyers or foreign investor?
Yes, we do loans for foreigners. whether you are expat or even if you're a non-resident as well, we actually can help. We've got a product through the lenders called Mortgage Easy. It's a Queensland-based lender. And the reason why this lender is unique is they will do loans for non-residents, for example, if you are self-employed or PAYG. So most lenders in Australia, they don't like dealing with foreign income. Look at it if you're working for a salary with an employee with a payslip. If you're self-employed foreigner, or if you have foreign income from a self-employed source, if you like, no lenders will look at it, but Mortgage Easy will. And I'm going to just add something here very quickly that will blow your mind, if you like. With this option for foreign self-employed customers, if you don't have your tax returns or financial statements and so forth, you can also do an accountant letter signed by your foreign accountant. Okay, so like I said, if you don't have the tax documents and all that to sort of, to support your application, there is a non-resident low doc option. Only document you need is your accountant to sign off a letter.
Nice. Gerard, I think probably my next question will be, what can't you do, isn't it? You basically can do everything. Yeah.
My wife will tell you there's a lot of things I can't do.
Good one. Yeah. And we are approaching 9 o'clock now. Once again, thank you.
So much fun. I'm going to do this again.
No, definitely. We will do this quite regularly because there's always new products coming into the market. There's new update about the lending, and so we definitely would love you to come back again, share your knowledge with us. Before we're signing off, I just want to say a big thank you to Gerard for coming and join us this evening to share your knowledge and your experience with us. And like what I said before, I have worked with Gerard for quite some times now, and he is really super. And he never give up, because I have given him some of the challenging case as well. I gave you good case as well, easy and a challenging one. And it was, those so hard that he never actually given up. He always go and find solution. And unless, if the client really can't do it, then there's not much we could do. But if there is possibility and client are willing, he can always find a solution for us. So thanks, Gerard, for looking after all our clients.
Thank you for having me.
Yep. So once again, thank you everybody for tuning in this evening. And I hope you have picked up some new knowledge and new insight about your loan and the different loan product as well. If you are interested to engage Gerard to find out, just basically what you can do now based on your current situation, your current loan product and stuff like that, get in touch. If you haven't got Gerard information just then on the slide, PM us, send us a message. We will connect you guys together. Yeah. All right. Thank you once again. Thank you, everybody. Signing off now. Bye-bye.
Bye-bye.